Hi, very good evening, everyone. This is Caroline Ng, the Executive Director of CFA Society Malaysia. A warm welcome to everyone to CFA Society Malaysia's first FinTech Forum. We are very pleased to organize a three-part forum on FinTech. Today is the first session, first panel on digital banking. The same time next week, same day, we will have the second panel on asset management. And the following week, same time, same day as well, we will have the third and concluding part on cryptocurrency. Yeah. So without further ado, I would like to pass on to Justin, the President of CFA Society Malaysia, who will then take us through today's session and introduce the panel for today. Justin?
Thank you, Caroline. A very warm welcome to all of you, right? Our members, CFA members, candidates, as well as friends of CFA Society Malaysia, right? Wherever you are, I think please continue to stay safe and well, right? And as Carol mentions, this is the first of the series of FinTech Forum that we are running. So the first one is actually quite interesting, which is around the very big two words, the very topical word, right? Digital banking, the next level of banking experience, right? So most of you will know that I'm a volunteer with Society, but I do have a full-time job. I'm a consultant with consulting firm, right? Supporting financial services clients when it comes to various transformation agenda. So digital banking is also something that's very close to my heart, right? So happy to be around today to take you through some of the thinking. So I think if you look at this busy slide here, I think this is a slide that we extracted from the FinTech News report 2021. So from here, you're able to see that digitalization has been a mega trend and has significantly transformed our life. And the change is actually quite apparent in Malaysia, right? And you start to imagine 10, 15 years ago, when we're thinking about digital, when thinking about online purchases, we often do it for goods that we cannot find, for things that we cannot do it through the conventional way, through the offline way. We will then go to online, right? So this also when it comes to shopping experience. When you want to buy something, we always check out in a kedai runci, in the supermarkets, in a neighborhood before we kind of go online to search for the goods and items. So this is the experience that we used to have 10, 15 years ago. The same thing when it comes to banking. Right, 10, 15 years ago, when we need to perform certain transactions, the first thing we would do is to go to the branch, right? And if you start to think about your current thinking now, we tend to do a lot of things digitally, either through the website, either through the mobile apps, etc., right? So the only time that we want to visit a branch is for transactions that cannot be performed online, right? So if you look at the whole trend here, digitalization has changed our life and also the customer experience, and hope that in a way the change that it has made in terms of enriching customer experience has been apparent to you. It has successfully bringing a lot of offline engagement, offline customer interactions, transaction done manually to a lot more automated and the digital fashions. Right, so hope that we can continue riding the wave of digitalizations for the betterment of the country. Right. With that, we'd like to introduce you the panel of experts that we have. Right. So there are actually three dashing gentlemen that at this point would like to introduce them. I'll get them to introduce themselves. Rizwan, are you with us?
Yeah, I am here.
Yep.
Definitely.
Right, Rizwan, would you want to say hi and introduce yourself a little bit?
Thank you, Justin. Yeah. Hi, everybody. My name is Rizwan Aziz. I am the board advisor for the FinTech Association of Malaysia. Used to work with a couple of banks, used to be regulators, and have been working for the past 20 over years. Yeah, happy to be here, and hopefully we can share and learn with each other in terms of how we want to know generally about FinTech and how we want to tackle specifically things that we need to know, either as someone who is a bank consumer or those who are thinking of being part of the transformation process itself. Yeah, happy to share that thoughts as well today. Yeah, hopefully we can have a great discussion today. Thank you very much.
Thank you, Rizwan. I think let's move to our favorite neighbor, Nising. I think we have another expert from Singapore. Nising?
Hi, thanks, Justin. Thanks very much for inviting me to this CFA Society webinar. My name is Nising. I'm a partner with Deloitte Singapore about 2 years now. Before that, I was working in the MES. My last role there was as Assistant Managing Director responsible for prudential policy, macroprudential supervision, and technology and payments supervision. This topic of digital banking is very close to my heart. As Justin said, one of our key projects this year would be helping some of our clients here in Malaysia as well as in Singapore with their digital banking aspirations. So certainly looking forward to discussions with others on the panel and learn from all of them on what we can do and what we should avoid doing. Thanks very much.
Thank you, Nising. I think let's travel a bit further to Hong Kong since we can't travel physically. I think virtually, let's try to do that. Sam, are you with us? Sam, you're on mute.
Can you hear me?
Yes, Sam.
Okay, hi everyone. Thanks for having me here. I used to work in Malaysia for the last 5 years. Now I'm back to Hong Kong. I'm originally from Hong Kong. It's really my pleasure to join this forum and have the opportunity to share minds and thoughts with all of you. I used to work in Citibank, which was a conventional bank, and now I moved to Ant Group to set up the Ant Banks in Asia. So it's really a great opportunity to have the experience in both traditional banking and some fintech area nowadays. Hopefully you will find this section enjoyable and you can get something out from this section. Feel free to ask anything and let's be interactive today.
Thank you, Sam. Before we start the panel officially, I just want to give a small disclaimer here. I think the views that shared by the speaker today, I think do not represent the views and stance of the respective organizations, right? I think those are merely personal view in a very personal capacity, right? All right, I think let's get it started. Sam, since we have you last 2 years ago, I think we saw about 8 virtual banking license has been granted by HKMA, and 8 of them now has already been launched, and Ant Bank is being one of them. Congratulations, Sam. How are virtual bank doing in Hong Kong today?
Thank you.
Can you potentially share a bit more?
Sure. There's a slide that I put for the Hong Kong digital bank landscape. Maybe we can skip to that one. Yep, this is the one. So I want to share some high-level thoughts on that. Again, nothing really business strategy related, but from a strategic dynamics in Hong Kong, 8 banks has been set up and they're all fully launched nowadays. Most of them have different competitive advantage in terms of the shareholders mix. As we know, the component usually including the FI usually can be a bank or insurance company background like ZA Bank. There's a tech company joining as part of the shareholder, and also there's a retail component. So let's pick Leafy as an example. the FI representative would be Bank of China. For tech side would be the Jingdong, which is an e-commerce giant in China. And for retail part is a retail giant in Hong Kong, which is the Jardines Group, has a lot of supermarkets and the household, including IKEA and all this branding as well. So those are the combination I think the FinTech area is really looking at, to combine the three strengths together and then segment the market and the customer either to C, we call it to C or to B. To C is more to consumer, to B is more for business, SME, corporate customers. So each bank has their different position that we will go through a little bit more in the subsequent discussion. But from an overall status perspective, as a CFO in my career, I would like to share with you some financial performance of these 8 banks according to the 2020 results. There are 2 charts here. I did not label the charts, what they're representing for. So maybe Justin, do you want to have a guess? What is the first chart, which is on the left-hand side, represent?
First chart, is it?
Yeah,
Sorry,
the first bar chart.
First
on
bar
the
chart.
left.
Amount of is either amount of customer or amount of transactions.
As those are not the answer. This is actually the how much they make losses for the first year.
Right.
So all the banks, it's very interesting. The dynamic is every bank try to establish within a year, and there are huge investment before we see any results of client acquisition or transaction made. The banks all have to invest a lot of money in this franchise. So because it's most of the costs are for human resources and also for technology infrastructure. So as we can see here, Mox Bank, which is backed by Standard Chartered, has the most spending, followed by Levy as second. And then you can see ZA Bank is the third spending bank. So these are actually how much losses they make. There's no right or wrong, good or bad. It's just factually, these are the investment they're making. And all these are, I'm not showing numbers, but all these are disclosed information. While on the right-hand side, that's actually what Justin referring to. This is the size of the deposit they gather for the first year as of December 2020. So as we can see some very interesting trends, some of the bank may have invested a lot, like Mox Bank, and that's why they have the largest share as ZA Bank as well. While Levy has a different strategy, they invest a lot on the payment side, but the deposit gather is relatively small across the 8 banks. So there are a lot of reasons behind, including the product offering, the marketing strategy. We can talk about it later as well.
Interesting. But since it's a public information, Sam, can you give us a view in terms of how much, what is the amount of loss in terms of magnitude during the first year? I presume it's the first year loss, right?
Yeah, so it's ranging from about 200 million to 400 million Hong Kong dollars. So
Right.
Hong Kong dollars to ringgit is like 1 to 2. So it's around 100 million ringgit to 2 million ringgit, 200 million ringgit.
Right, which is quite significant.
Yeah, very significant. Yeah, and most of the bank expect to make losses for the first 3 to 5 years, really depending on how COVID is behaving and how customers are accepting the new virtual banking experience. But first of all, because of the keen competition in Hong Kong in terms of banking, Hong Kong is definitely a very small place in the world. It's not even a country. While there are 7 million people which are served by more than 160 banks in Hong Kong. So definitely overbank for most of the population in Hong Kong. That's why they have to really pay a lot of marketing dollars in order to get customer apply, open an account, and then spend and use the banking service in these new 8 banks.
Interesting, right? And in Malaysia, we all know that to start a digital bank, I think we need 100 million ringgit. And for Singapore, if you're looking at full bank, it's about 1.5 billion Sing dollar. Can you share relatively what is the capital requirement for Hong Kong?
Yeah, so the capital requirement in Hong Kong is $300 million Hong Kong dollar. So it's like 150 million ringgit. But most of the bank has investment, the first tranche ranging from 350 million to 700 million ringgit equivalent Hong Kong dollar capital as the first phase of investment. Okay,
thank you. Thank you, Sam. We'll come back to you shortly when it comes to the customer reactions, feedback, and experience, right? I think with that, we'd like to move on to Singapore, right? Understand briefly, I think directionally, MAS discouraged licensed bank to go for digital banking license, which is very different from Hong Kong experience, right? Where we saw the licensed bank were part of some form of consortium in securing some form of license. And in Singapore, we understand that 4 licenses has been granted by MAS, 2 full banks, 2 wholesale banks, and we understood that the competitions was fierce. I think there were about more than 40 companies, and which form about 21 applications submitted to MAS, and MAS subsequently shortlisted to a shorter list, and then 4 get awarded at the end, right? So nice thing. Could you share a bit more in terms of the digital banking race in Singapore?
Sure, Justin. Sam mentioned earlier that Hong Kong is a very small place. Singapore is an even smaller place, right? So maybe before discussing Singapore, I thought it may be useful to sort of take a step back to understand why there's so much hype around digital banks in Southeast Asia. And several factors, I think, are driving this development. I think first on the demand side with COVID-19 and social distancing, consumers are becoming more familiar with digital channels, and they have developed sort of greater familiarity and confidence, right, in using these channels. There's also a general sense, I believe, that digital is the way to go to ride the next wave of growth in Southeast Asia as countries emerge from COVID-19. On the supply side, I think the authorities see digital finance as a means to boost the economic efficiency and to promote sort of financial inclusion as well. So that's why you see not only Malaysia, but also in Singapore, Indonesia is also talking about releasing guidance on digital banking sometime in the middle of this year. And we understand from sources, right, that Thailand and Vietnam are also studying digital banking quite closely, right? So I think there's a wave of this digital banking in the region. And now, well, focusing on Singapore, right? As you said, there were only 5 licenses on offer, right? Like in Malaysia. And in fact, MAS eventually granted only 4 of these licenses. And these were divided into like the 2 license classes that you mentioned, 2 full banks that can serve both retail and corporate customers, and 2 wholesale banks that can serve only corporate customers. So my sense is that MAS was probably concerned, right? Just like the Hong Kong regulators may be thinking, Singapore market is already relatively well banked, and so they want to sort of avoid excessive market fragmentation, and so limiting the number of licenses and further limiting the number of full bank licenses to only 2. There was, however, no shortage of applicants. I think if you look at this slide, the close to 20 plus, right, applications were submitted. And some of these applications were backed by very large alliances, right, comprising more than a handful of consortium members. So it's quite amazing. They managed to get all these people to align together on a particular strategy and submitted an application together. But if you look at the successful applications, the successful applicants, and those are the ones that are highlighted with a red box, they either applied on their own or they had relatively fewer partners, right? This probably reflected the challenge of getting aligned among partners to submit a joint application. And I think one particular sticking point from sort of market talk and the work that we were doing is that MAS actually required shareholders to provide undertakings to sort of backstop their banks, right? So I guess the concern about having to backstop a large number of partners could be a concern. And I think the challenge also in Singapore was that the time period from the time when MAS announced that they are going to open up for digital bank license to the submission of the license application, it was only a very short period of 6 months. So there was really no time for sort of that speed dating game to take place properly, right? People were just rushing into the market and looking for consortium partners, and maybe they jumped into bed without knowing very much about their partners. And only subsequently, late after they have submitted the application, or even close to submitting their application, they realize, hey, maybe these things don't work out. They are not as aligned as they believe themselves to be. So that
hence the divorce rate is high in Singapore.
So potentially, yeah, that might be. Yeah. So another observation that you made also, Justin, is that there are no banks among the applicants, and this is not possible because MAS has a separate framework for banks to set up digital bank subsidiaries, right? And this is in contrast to Hong Kong, where there were several large banks like Stanchart, which Sam mentioned earlier, ICBC, Bank of China were among the successful applicants. And I think this could well be a defensive strategy by the Hong Kong banks, right? Because to the extent that they sold up one of these licenses, it means then that it's one fewer license for a non-bank competitor. And I think we are seeing a similar phenomenon in Malaysia as well, with interest from a number of banks. I think just today, RHB announced, right, that it is partnering Axiata to apply for a digital bank license. So certainly something interesting to watch out for as well. And then maybe a final observation is that there seems to be a very strong China connection, especially among the digital wholesale banks, both Ant and Greenland Financial. And I think that there's some sort of base economic rationale, right, for this approach. China is Singapore's largest trading partner, accounting for about 14% of total trade. And in fact, for a period during the last decade, Singapore, tiny as it was China's largest foreign investor. Right? So evidently, there's much riding on sort of deepening economic relations, deepening economic linkages between both countries. So having these Chinese-owned digital banks can help connect Singapore businesses to the China market, and also the same way they can help provide a springboard for China firms to expand in Southeast Asia. So just some quick observations about the digital banking market in Singapore. Back to you.
Thank you, Nasing. I think it has been quite insightful, right? And I think what is in a way very different from Singapore is that I think you've got two classes of license. We got one for full bank, one for wholesale bank, right? So maybe just from a perspective, how do you expect in a way the digital wholesale bank would play out differently as compared to some of these full banks?
Yeah, as I mentioned earlier, the wholesale banks can only serve corporate customers. So I guess the value proposition will be very focused on corporate customers, including particularly small and medium-sized enterprises, given that this is typically the group of corporates that tend to have challenges in terms of securing access to financing. And I guess in terms of value propositions, the fact that both of them have for China roots, right? One of them, in fact, Sam's subsidiaries would be, I think, really playing up the China factor, that linkage back to the China market, and possibly serving as a platform for Chinese firms to expand in Southeast Asia as well.
Right. Okay. Thanks, Nain. I think it's time to move on to come back to our home, Malaysia. Right. I think with that, we'd like to invite Rizwan to share with us some insight. Right. I think Rizwan, I think now today is 2nd of June. I think to the central bank deadline of 30th of June. I think we are, excluding this week, we only have 3 more weeks to go. Right. And in some of the official statement given by the governor of Bank Negara Malaysia, there are more than 40 applicants have recorded the interest with Bank Negara. And Naising pointed out that today we heard from a telco plus a bank consortium openly came out and say that they want to do something about it. Yesterday we read the news about a government link technology company, right, who also has expressed some form of interest to go for digital banking license. So, Rizwan, could you share with us a bit more what is the situations of digital banking race in Malaysia today?
Thank you, Justin. I wanna share about the difference between what's the dynamic in Hong Kong now, what's the dynamic in Singapore, and coming back to Malaysia. Hong Kong is in a situation where they are now already launching and operating the digital bank, and Singapore now is in the phase where they are building it, and Malaysia is in the state where we are now scrambling and structuring how to apply for digital bank. So many of the aspiring applicants are now putting together whatever that they can learn from, especially from Singapore and Hong Kong, and you can see that there's a lot of experts that's from either Singapore or Hong Kong that's helping out many potential applicants. And the thing that we definitely are seeing in terms of interest or things that they are trying to address is these 5 things that we are putting up now in terms of from a digital bank construction perspective. Who are we talking about in terms of applying for it? So typically there's 2 large groups where you notice that banks like RHB decided to partner a FinTech company in the form of Axiata and Bose. But really, in terms of others, in terms of constructing the consortium, there's not much news of the similar type that we heard. A lot of pure challenger are actually looking at bringing in new value proposition and try to fill in the gaps. And this is where it's interesting to analyze later in terms of how and what are the thinking process and the action that will come thereafter in terms of whether you pursue it as an incumbent bank combining with FinTech, or you are a pure challenger that's coming in and try to really make a different perspective and value. And then what do you need to do in terms of building up in terms of the structure of the bank that has different value proposition and making it happen? Do you hire more of the experienced bankers that's already in the market, or do you rely more on people who are tech savvy and make sure that they understand on how to focus on customers centricity? And I would also want to focus on and share some of the areas of opportunities. So these are typically the question that I was asked, and always I'm asking some of the potential applicants in terms of how they look at building and trying to put their unique value proposition and what are their focus, because the guideline on digital bank issued by Bank Negara are pretty clear in terms of what are the type of customers and the exemptions that's given, and then the initial phase or that you can actually make sure that you craft your path to profitability. And this is the kind of things that we are talking about, discussing about at this point of time for Malaysia perspective. And unfortunately, I can't put any names because there are no names to be shared. But interestingly, these are the perspectives and these are the questions and aspects that mainly being discussed by many of the applicants, and they are trying to put together a compelling value proposition for them to go to Bank Negara by the end of this month. Many of them also asking, because of the lockdown that's happening since yesterday, are we going to get an extension from Bank Negara to move further from 30th of June? I suggest don't pray for that, don't hope for that, because I don't think Bank Negara will move that deadline. But if they do, I think it's a good thing. But from the look of it, I don't think so. Yeah. Thank you very much.
Thank you, sir. And what is interesting about Malaysia as compared to Singapore and Hong Kong that we spoke about, Rizwan, is about this thing called Islamic Digital Bank. Right, where I think that is that's so unique about our country, right? How are you seeing the interest around the Islamic Digital Bank as compared to the conventional, given that we have only 5 slots, right?
Yeah, I think this is where it's in my perspective, it's a double-edged sword. It's an opportunity if you really know what to do, because there are already Islamic bank that's available in the market, and there are also conventional bank that's offering the Islamic Windows services. But the interesting fact about digital Islamic bank is this is where the unique value proposition really needs to be understood well by whomever the applicants in going and making sure that this is going to be sustainable and it has potential for it to be scaled and able to go beyond just serving the Malaysia market. And understanding this is really crucial because yes, you probably could grow and develop to a certain extent, but beyond the initial phase or of the time when Bank Negara start to pull back all the exemptions, are we going to see clarity in terms of how this Islamic or Sharia compliant digital bank able to survive beyond that period? And mind you, a lot of perceptions are not too positive about the Sharia or the Islamic digital bank. And this is another angle where they need to prove that there's different value proposition, a compelling value proposition, and not just for the Muslim, but also for a larger client base that will be able to serve. And this is the difficult part, the B40 and the unserved and underserved. And that really requires a very creative and very intelligent way of how the Sharia and a digital bank needs to be crafted and constructed.
That's right. I agree with you on that. And Rizwan, by looking at Bank Negara licensing framework, I think we understand that it's either or. You either go for conventional or you go for Islamic. They don't allow co-mingling per se, right? Or hybrid sort of license for this time. So no Islamic Windows, no Islamic product to be offered by conventional, etc. Right?
Yeah.
And if you have a crystal ball in front of you, how many out of 5 will be Islamic?
Well, if I really can't give you a definite answer for that. But if I'm the one who's making a decision, I would really at least allocate 1 license specifically for the Sharia digital bank at least, unless
Yep.
I see more compelling and unique value proposition being put in front of the evaluating team in Bank Negara, because it's really difficult from the current dynamics that we have. But I'm really hoping that there are more that's able to come up with that unique value proposition, especially for the Sharia.
Yep. Thanks, Rizwan. All right. I think if you look at digital bank as a whole, I think the whole narrations is about to serve the underserved and unserved client, right? And a lot of them, I think a lot of global digital bank that we have looked at, they tend to have a propositions of client first, right? I think with that, maybe want to move on to the Hong Kong market, given that you have Egg Bank that has already been launched, right? Maybe with that, I will invite Sam. Sam, I think it's interesting to look at Hong Kong market, given that given the launch of the Egg Banks, right? How are consumers responding to the virtual bank in Hong Kong? Any interesting features that you would like to share with everyone in this forum?
Definitely. This is actually my favorite part in today's section. I really see a lot of innovation and interesting stuff happening. And we did a lot of client survey and when I interview people for joining the bank, I also get to talk to different walks of life as well. The feedback is very, very interesting. Before we launched the bank, we thought the older people would be less tech savvy and probably not really the target segment that we can get more clients from that particular segment, while everyone is trying to focus on the new generation, which are college students or those who just come to work from the educational area. But obviously, it's not really the case. Maybe the nature of Hong Kong people are very profit or small benefit type of motivated. So whenever there is coupon, there's high interest, some financial benefit that the folks can benefit from for opening a new account in the virtual bank. Actually, people will spend effort to open the account and try out the experience. So from the overall market, in terms of the industry of customer, where they are coming from, definitely most of the customer at the first month are coming from the banking side. I think for first thing, they want to learn how the virtual bank is different from the conventional bank. And is there anything they can learn from the virtual bank and bring back to their own bank? And also they're very sensitive to all these financial benefits. That's why a small difference in the interest offering for deposit or loan interest is very attractive to those group of customers. Well, when we talk to the college student, we found that they are not that interested in virtual bank for the time being, not because of any reason, but just that they think they have no money and not a lot of money. That's why they don't need a lot of bank account and they don't have much transaction to deal with, which is slightly different from what we believe from the underserved segment that we thought when people has less money, it's higher chance for them to be charged for a fee of opening a bank account in the traditional banks. So, but it doesn't really look appealing to the new generation, and small interest difference doesn't make a huge impact to them either, because the principal amount of deposit is small. No matter if it's 1% or 5% interest, it doesn't make a real difference from in absolute terms to them. So that's something really interesting in terms of finding. If I go to the product innovation and the financial inclusion part, the key functions or key features that we have observed from the Egg Banks are quite similar. The first part is definitely remote account opening. Instead of going to a branch to open an account, the customers can just download the app anywhere, anytime, 24/7 around the clock, and just apply by showing their identification documents and also the face recognition, taking pictures of different angles, then they can open an account easily within 10 minutes. So I think this is a whole new experience for all the banks and customers as well. The second part is really the high yield and flexible deposit. So I have put 7 pictures here, which are real public offer from different banks, different virtual banks in Hong Kong. For the first one is offered by Ant Bank Hong Kong. They're offering 20,000 Hong Kong dollar at 2%, while the overall traditional market for Hong Kong dollar is 0.01% in terms of the saving account interest rate. So this is like 200 times of what the normal bank will be offering. It's very financial inclusive. It's really sharing the potential revenue that the bank can have with the customer to address the financial inclusion part. While on the second picture, this is another offer by the WeLab Bank, which is very interesting as well. It's a whole new idea. They are trying to create a group needs for people to deposit together and enjoy a high interest rate. So what they do here is, this is actually a traditional minibus, a picture of a traditional minibus in Hong Kong. Many people have tried that as a public transport. So they're having this mini bus deposit program. If the total amount of customers join this program within a certain period of time, they can have high interest rate if the number of customers joining this mini bus is more. So they're in a way speculating as a customer, you can speculate this mini bus will be very popular, and then you would join this and ask all your friends to join together on this minibus, which means by deposit money into this minibus deposit program, and then everyone will have a high interest rate. So this is kind of interesting in terms of how they interact with the customer and the bank offering. And then the third part is really the scenario payment. In the traditional banks, most of the payment are done by credit card or some fund transfer from bank to the billing agency. So right now they're using a lot of QR code, and some of the banks still continue the routes of Visa and MasterCard. But usually how they market the product is really by offering huge rebates or connecting with some interesting element in terms of the rebate. So if you look at number 5, the picture is showing the bank actually is offering up to 200% rebates, meaning if I spend $100 of buying a meal, I would get $200 back to pay for my meal, and also as the reward of me spending on their card. This is definitely no-brainer from a profitability perspective. It's all marketing strategy. Picture number 6 is talking about the shake idea. So this one is more lucky draw as well. When you spend something, there will be a chance for you to shake your phone and see how much you can earn as cash rebate. It's ranging from 1% to 5% or 10%, similar concept from lucky drawing the cash rebate. So this is something the bank can use the system algorithm and write a program on and leverage on the technology to offer to the customer in a more fun way. And the third picture is actually showing there are a lot of banks in order to promote that. And since they are connecting with the financial inclusion, kindness type of theme, so donation is actually one of the scenario that most of the banks want to connect with to show social responsibility. And I think this is really a good gesture and image by the virtual bank to get into this market as well. The other market tactics we have observed is, for example, for ZA Bank, they allow the customer to pick the last 5 digits for their card number. So it's like sharing more authority or power to the customer. They're empowering the customer to choose what they want. So for example, myself, I put my birthday number on the card, then I can have a very unique number in the card. And picture number 7 is something very interesting over by Mox. This is actually a free stickers that they know that a lot of the new generations like to use stickers on social media. And especially when they use WhatsApp, Signal, and all these chit-chatting apps, they would like to use stickers. So they want to blend in that and make it a lifestyle habit for people to use that in order to promote the bank's branding. I think these are the interesting things we have observed so far. And I have listed out some of the marketing tactics and product innovation on the left-hand side. If you're interested to ask any particular question, I'm more than happy to address. Thanks,
Interesting,
Justin.
Sam. Interesting. I can't wait to shake and insert my LOL emoji in my WhatsApp from a bank. Right.
The shake actually hurts my elbow.
You've been shaking hard, I can tell them. All right, Sam,
Yeah.
I think between asset product when it comes to financing versus the liability side deposit, how do you think, I mean, what is the degree of reactions from Hong Kong customer? Are they more reacting to deposit side or are they more reacting to the financing side?
Okay, so definitely the deposit side is more reactive. The overall loan to deposit ratio is 3% as of last year for all the virtual banks. It means they have gathered a lot of deposit, but there's no way for them to deploy. The reasons are varies.
It's a good problem.
Some of the banks really offer high, yeah, it's a good problem, yeah. Some of the banks really offer high interest rate in deposit gathering. So that's why like Mox, they offer up to 1 million, you can have 1% interest for the deposit. And this is something you can never see in Hong Kong because those are all saving account, like saving or current account. There is no time boundary to the bank. And if you know from a banking perspective, under Basel liquidity requirement, those are actually not that high value in terms of the stability for the funding needs. But on the loan side, I think there are some fundamental issues in the personal lending market as well. In Hong Kong, there is different types of bank offering tax loan because the tax payment in Hong Kong is actually paid not in advance and not on a monthly basis. So there are huge amount every year. People will receive all the salary 100% to their account, and then at one point of time, probably in second quarter, they have to pay for the tax of their last year income. So that's why most of the bank has this tax loan offer, which is a good time for all the traditional banks to get the income statement from the customers and then offer them the personal lending facilities. The interest rate for those are already very low, like 1.7%. for lending product, personal lending, unsecured lending product. So that's why before the virtual bank has kicked in, the personal loan market is already very severe in terms of the competition. Not to mention outside the banking industry, there are a lot of money lenders and online money lenders nowadays. So that's why I think the lending side is something really hard for the virtual bank to kick in. And that's probably most of the bank's profitability model. So it's a challenge for all the virtual banks.
Understand. And Sam, right? I think I'm trying to call out certain questions that and thanks for all. I think for those of you who have put in your questions via app Meet PS. I think for those who have not done it, I think feel free to do that. I think couple of questions are related, and one of them directed to you. Thought of getting your view. I think, and it's also leveraging on the earlier discussion, right? So when you're saying that consumers reacted to deposit campaign very well, launched by the virtual bank, we all can imagine that the deposit in the conventional industries is getting less sticky, right? So you have a migration of deposit from one to the other. How do you see the impact, right, with the launch of digital bank? What are the impact that you see on the incumbent bank today?
The banks are reacting, but actually to be honest, whenever we look at e-banking by traditional bank versus the virtual banks, the product that we can offer versus the traditional bank are not that much difference. Probably the most different experience is really the remote account opening process. When you talk about the deposit, the loan, loyalty program and all this, actually, when you look at the credit card business, they have the similar type of tactics as well. So I think some of the banks are reactive, but they are not too concerned about the market share from a lending perspective. And there's one product no virtual bank has touched on for now, which is mortgage. And
I think, Sam, we are losing you a bit. All right, I think Sam has been disconnected. Right, I think we'll have him back later. Maybe with that we can move on to Singapore. Nising, are you with us?
Yes.
Yeah, I think let's move to consumer market in Singapore. Nising, right? In Singapore, I mean, we all know that you have 7 DC, right? 3 Singapore banks with 4 overseas banks, and 7 of them has massive presence in Singapore market. And on top of that, being international finance hub, you get a whole bunch of international bank, right? I think the last count is about more than 100 international bank. Has some either locally incorporated or has a branch or has a rep office in Singapore, right? At the same time, I cannot imagine that there's a Singaporean without a bank account, right? Can you share with the audience a bit more, why do you need 3 additional banks in Singapore?
Yeah, I think you're absolutely right. So there are more than 150 banks operating in Singapore.
150, wow.
More than, yeah,
right.
yeah.
So why do you need 154 now?
Exactly. So by all accounts, right, and bank accounts included, Singapore is really quite well banked. So as you said, why do we need another 4 more banks, the digital banks? And to answer that question, I guess I'd like to invite you, right, everyone, to just travel back in time, 15 years to be exact, right, and ask yourself, do you know back in 2006 that smartphones will become such an important part of our lives now, right? And I think many of us didn't even know, right, that Apple was developing such a product. And when it first rolled out in 2007, there were people who sort of wondered, do we really need such a phone? Apart from, of course, the Apple supporters, right? I think Justin is one of them. And then subsequently in 2008, when the iPad came out, lots of jokes about what pad it was. So really, as I think with any of these new product categories, it may sometimes be quite difficult to imagine, right, what's the value that the product would bring to the consumer. And this value may become sort of evident only with time. And I think this is the same with the digital banks, right? The regulators, they are really taking a calculated risk by setting up a sandbox for experimentation. So they open up the market to the new players, they relax some of the regulatory requirements, but they also impose some business restrictions during the startup period. So in Malaysia, this is called the foundational phase, right? And if the experiment fails, then what they will do, the regulators will activate the exit plan and resolve the failed bank in an orderly manner. If the experiment succeeds, then they will have achieved the objective of promoting innovation, addressing customer financial needs, and so forth, right? So I see that as sort of like a balancing act that the regulators are playing, trying to promote innovation in the market, while at the same time sort of limiting the risk that may be posed to consumers.
Right. So you're saying that this is a trendsetter.
In a way, and I guess also because there are issues, right, with the market right now. There are needs that are not fully addressed. So I think in Malaysia, there's this in the guide to the digital bank licensing, there's this reference to unmet needs or underserved customers. And similarly in Singapore, there's some sort of common pain points, right, that bank customers will highlight. So for instance, if you're looking at the SME market, many SMEs find it difficult to open accounts and obtain financing. The onboarding process can be extremely cumbersome and lengthy. So Sam talked about how the remote onboarding is sometimes an attraction, right, to some of the players. And then I think for SMEs, many of them do not have a necessary credit history or the collateral to qualify for loans as well. So that's one big challenge. Another pet peeve is for transaction charges. There's sort of high transaction charges and fees. And these add to costs for small businesses. And then for individuals, it eats into the very thin margins or the thin yields that people receive on their savings. So Sam was talking about 0.01% interest in Hong Kong. Singapore is no better. It's about there. Some banks offer slightly higher 0.05%, but really it's nothing. Right? And then I think the third class of problems is really in terms of how you help customers manage their finances. Right? Is there a way to keep track of our spending easily? Any way to incentivize us to save on a more regular basis rather than wait for bonus time, then you put aside some money to save? Or in fact, when your bonus time comes, then you spend all the money on big presents for whoever. You may go on a trip and so forth. Right? So there are these things about how you help individuals plan out their finances. Also, how to simplify the investment process, given that there are so many different investment options that are available. And also, I guess, maybe even in the process of helping investors rebalance their portfolios, right, over time. So I think if the banks can address some of these challenges, then they will make themselves relevant to customers, and they will also, I guess, provide a push to the incumbent banks to also try to innovate and sort of meet some of these needs.
Certainly. Nice thing, I think the most popular questions that's going on in your Q&A now is about around security. I just want to tap on your experience, right? I think you were regulator for more than 20 years in Singapore, right? I think the questions center around, I think we have been seeing a lot of cybersecurity breaches, right? I think there are cases like customer data has been stolen. I think we see billions of data was stolen in the past. I think, and these are very high profile cases that we're seeing, right? Is digital bank safe for consumer?
Yeah, this is a favorite question, right, among many customers. How safe are the digital banks? But I would sort of also want to turn that question around and say that in the modern world, basically no one is safe. Even sort of very simple bricks and mortar business can be open to cyber attacks. So just today, there was a report in our local news that there's this electronics retailer called Audio House, right? So it's a really bricks and mortar business selling electrical goods. As part of its sales process, it collects some customer information, and that information was hacked by hackers, right, and stolen. So even bricks and mortar businesses can be open to cyber attacks. So then the issue is how are digital banks securing themselves against these attacks? And I think what is many regulators are paying attention to the extent that the digital banks are actually putting their services online via cloud service providers using SaaS services. One could actually argue, right, that potentially the level of security that they can provide will be higher than if they were to try to do it in-house with on-premises systems and so forth, especially given legacy systems, where different legacy systems have to interface, and sometimes people forget, right, about the various ways in which they are connected, and then forget to make the necessary patches. That's when cybersecurity vulnerabilities may arise and open the bank to attacks by hackers. Whereas I guess in a new digital bank, if you are sort of planning everything with a clean slate, you can imagine putting all these things together in a more logical manner and relying also on the very strong security capabilities of some of the large service providers like your AWS, etc., to provide the security for the platform. Right? And then of course, that doesn't mean that you absolve responsibility for cybersecurity altogether. You need to make sure that there's a clear understanding between the service provider and the bank. What are the different parts of the entire end-to-end process that they are responsible for, and we have to be held accountable for the cybersecurity.
I see. I think where you're coming from is that I think you get to build from zero ground again, and then you can make sure that the control around it are properly in place and intact, right? Where maybe some of the incumbent bank that may not able to do it, right? So good point there. Agree with you. Nice thing on that. I think next I'm going to try to use deepfake to do a remote account, see if a bank can detect or not. Thanks, Nising. Moving along, coming back to Malaysia, I think let's talk about consumer in Malaysia, right? I think relatively among the three countries, Malaysia has a bit more challenges when it comes to geography distributions. We got west to east, we got north to south, we got a lot of states, right? Consumer of a different profile, different income group, etc., right? So Rizwan, I just want to invite you here at this point for you to share with us how digital bank in Malaysia plan to drive financial inclusion.
Thank you, Justin. I think this what you mentioned just now about the landscape of Malaysia physically and geographically serve to be or could be an advantage and opportunities to the candidates of the digital bank, because this is really an opportunity to demonstrate their capabilities to include as many types of different kind of customers, which I believe other countries may not have. And this would also provide a very good test bed in terms of choosing specifically the target market that would facilitate and support the path to profitability of the aspiring applicants of the digital bank. But before we go to all those external, the challenges are really deep inside the applicants, especially the incumbents, because one of the things that I've seen personally is the problem in terms of changing or making sure that the mindset of the stakeholders are really at the right place and really relevant to what they want to do. One concern that I have is when I saw the level of discussion at the board level in terms of their understanding and how they want to strategize, not even going to become a digital bank, but even thinking and discussing and deliberating about digitalizing certain processes. And this is something that I saw quite often, and I really analyze in terms of the mindset that can be compared between the incumbents and those who are constructing it from ground zero. And the cost, if you are the incumbent and if you try to really become an effective digital bank as per the definition that is supposed to be, it's going to be quite a lot, because for incumbent, it's like you are mid-flight with passengers on your plane and you are trying to change the wing of the plane that you are piloting now. So there's a lot of risk, there's a lot of new skill set, there's a lot of costs that you need to monitor, plus the risk, plus reputation, so many potential costs that you need to incur and you need to consider in terms of becoming a full-fledged bank. So that's why it's part and parcel of the difficulties by the incumbent bank for them. It's not that they are not aware, but it's very difficult for them to become a full-fledged bank. And going to the third point, everything needs to be relearned for the incumbent. So this is very challenging. The talent, the infrastructure that they have, and all the things that they have currently need to be readjusted to make sure that it fits the different vision and different way of doing things. And last but not least, there's also social impact, because as you know, I would love to ask Sam later in terms of how many staff members do they have compared to the incumbent banks that probably employ at least 15,000 to 20,000 people. And if they become a digital bank, would they still need this number of people to be around? And differently for the digital bank and starting from ground zero, I think they already have the right mindset in terms of what they want to do. The cost, based on what I've seen so far, is really, really low in terms of setting up and implementing and upgrading whatever that they're planning to do, even up to 10 years. And everything is new, no legacy issue, and they always focus on solving customers' pain point again and again and again. And this is one of the things that is really different compared to the incumbent. So even though I put there apply, build, implement, and pivot, but if you put this into the incumbent perspective, the way these four elements is being interpreted is going to be very much different for you to move from high touch, high friction to become high tech and low latency, compared to if you are starting from ground zero, you are focusing directly to become high tech and low latency. So this is very, very challenging. And I think the journey to the next level banking in Malaysia is going to be very, very interesting. Opportunities are abundant, but these four elements, either you are a new digital bank or whether you are an incumbent but aspiring to become one, it's going to be different, and they need to understand really in terms of how to apply, build, implement, and pivot as they go along to become a digital bank. I'll stop there.
Rizwan, thanks for that. Maybe one question for you is that how do you think the current incumbent bank in Malaysia to be impacted by this up-and-coming digital bank? Do you see them complementing each other, or do you see them competing with each other?
Well, I see different. I've seen different attitudes. Some of them are willing to collaborate, but many are saying that they want to collaborate, but it's more about dominating the discussion and the partnership. So I think if they embrace really the spirit of collaboration, they would really benefit, because they already have the captive that's loyal to what they have as an incumbent bank. They already have the expertise in terms of at least two aspects, in terms of the back office, control features, risk management, and the business solution that they have. And what they should be thinking is to collaborate in terms of customer engagement, which I think they poorly have executed that, and they have not really utilized the set of data that they have to be more proactive, because many of the incumbents are product pushers. They push product, they really look at the balance sheet and P&L first before they think whether this product is going to be relevant or not to the market. But the aspiring digital bank or the challengers are doing it differently. They are looking at customer first, customer pain point, acquiring data, and making sure that they work on the data, and making sure that they continue to be relevant, and their ability to pivot in a very short time are really something up to their advantage. And I've seen also some really aspiring digital bank wanted to use this data almost on a real-time basis to provide loans, to provide lending, to provide deposit, even up to certain protection on insurance, because that will make a lot of difference. Having a deposit or having, say, for example, a personal loan or objective financing that will be able to give you immediately what you need to buy or what you need to spend on based on your current need is totally something that the incumbent will not be able to offer. So I think that is something that needs to be think through by the incumbent if they really want to become a digital bank. And I think if I'm in the incumbent bank and running it, I would definitely embrace the real definition of the word collaboration and really collaborate with that, those challenges.
Good point. I think it's better to collaborate than to compete, right? Moving along, maybe we can go to the next slide. Yep, next one. Yep, I think Rizwan, given that we technically have 3.5 weeks to go in a race in Malaysia, any last word or words of wisdom for any of the applicant here?
Yeah, I think you mentioned earlier about Sharia banking, and I think the other aspect that could be added to the Sharia banking is also about the ethical banking. If you look at the trend in the investment management globally, there's a clear shift of portfolio management from the typical capitalistic approach to more on the ESG, and ESG features actually are very aligned with the Sharia banking concept or the Sharia finance, the Islamic finance principles. So I think this is an area where, as I mentioned earlier, if it's crafted properly with the right value proposition and a good UI UX design in terms of approaching customers and the relevant go-to-market strategy in terms of the narrative and how the story is being told, I think it is a very good opportunity for those who are aspiring to become a digital bank. And in terms of, as mentioned just now by Naising, in terms of cybersecurity and generally risk management, it is true that the digital bank actually are far more prepared because they are starting from ground zero. They know what and how things are connected, rather than those incumbents who may not be able to understand because the legacy could go back as far as 30 years, maybe 40 years, and mergers of God knows how many banks before. And there will be a lot of redundancy and some maybe thousands and thousands of redundant reports that is dragging down the performance of their core system. I think that is something that needs to be seen as an opportunity for talent actually to be nurtured, because this area in cybersecurity and risk management needs to be relooked at because the perspective is now different. And last but not least is on virtual account management. This is really in terms of making sure that internally, any banks that's running their own services and managing their own money and people's money are able to reconcile everything almost on a real-time basis. This concept needs to be the bedrock of the operation for the digital bank, because without it, if things are still run manually, a lot of things could go wrong. Companies like WeWork, for example, companies like Wirecard, though they seem to be like a digital company, but at the back, because of poor reconciliation, transparency were not there in terms of how they manage money, they ended up being in trouble. So I think these are areas of opportunity and things that could help in terms of how digital bank can really make a difference, especially for Malaysia. Thank you.
Thank you, Rizwan. Thank you. I really like the idea of having a virtual account management, right? Think about a virtual relationship manager that everyone would get, right? Moving on to Singapore, right? Naising. You shared just now that you went through an intense 6 months in forming a consortium, from speed dating to divorce in between, coming back together again to tie the knot. Any lesson learned, right? In that 6 months, I'm sure it's still fresh in your mind. and any 2 to 3 words that you could share with the audience here today.
Sure. Yeah. Well, we are in Singapore currently between the sort of license application stage and the launch stage. So I probably will steal a bit from Rizwan and a little bit from Sam also in terms of sort of lessons learned. I think the first one would be sort of engage the regulators early and regularly. I think during the license application stage, that's useful in terms of understanding what are the regulators' objectives and what are their concerns, so that then you can tailor, right, the application accordingly to address those objectives and concerns. Even after submitting the application, it continues to be useful to engage the regulator, answer their queries, and showcase your capabilities, right, and build credibility with the regulator. Which leads then to the second point, which is that it's very important to appoint the key personnel early. This is very, very helpful in boosting credibility with the regulators. They want to see, people who they can trust, right, in key positions within the bank, whether as board of directors to provide oversight, or in key roles like maybe head of cybersecurity, head of compliance, the CRO, and so on. So I think that's useful in terms of engagement with the regulators. It's also extremely useful from the perspective of driving planning and building up of the bank. So in the interim, right, between submitting an application and waiting for the regulator to come back with a decision, I think it's very, very key to already start looking actively for potential candidates, make conditional offers, right, based on, if the application is successful, then please join my bank. Because there will be a lot of competition in the market for those good names, right, who would be suitable as key leaders in your digital bank. And then the third one, sort of going back to the point of speed dating, is really getting good alignment with partners, whether it's on the value proposition, the business model of the bank, or in terms of the partnership model. What are the capabilities or assets that you leverage from each partner? And in particular, I think going back to what I think Rizwan mentioned earlier about the banks leveraging on data from the ecosystems of each of the consortium partners, there needs to be very clear guidance or agreement, right, on how data will be shared across the consortium with the digital bank. So just sharing three thoughts that might be relevant for the digital banks to consider.
Thanks, Naising. Appreciate that. So I think, guys, if you look at the different state of each of the countries at, right, Malaysia is at the application stage, so it's apply stage. Singapore is post-application stage, so it's currently at the build stage, right? So they're in the midst of building the bank to be launched by February next year, right? I think if I get the deadline correct. The third country, which is Hong Kong, which is launch stage, right? I think the go live stage. Maybe with that, want to move from apply stage, lesson learned, and to build stage. Now moving on to the launch stage, right? Sam, do we have you back?
Yes, I'm here. Can you hear me?
Great. Thanks a lot, Sam. Maybe my question is, what does it take to successfully launch a bank in Hong Kong, right? Share with us some of your tears, your sweat, your blood. We have a shoulder for you to cry on for today.
Okay. Actually, there's no secret from that. I think what the previous two guests has mentioned as well is all the same point. So I sum it up by having 5 icons here. The first one is definitely fight for talent. It's a really booming market, despite the fact that COVID situation make the employment rate higher than normal for the banking industry. Just imagine in Hong Kong, 8 banks are opening at the same time, fighting for the same group of talent in the market. How severe that would be. And to address Rizwan's question as well, how many headcounts or employees usually a virtual bank has. For the Hong Kong case, it's 150 to 200 people. That's it, not more than that, because we don't have branch people. We don't have a lot of manual operations to be done. And then we don't have a lot of RMs, the relationship managers, to maintain client contacts and all this. That's why I think from that side, the labor intensive part of the business is not there. But still, if we have 200 headcount per bank times the 8 banks in the market, it's more than 1,600 jobs creating at the same time. So congratulations to whoever wants to join banking and stay in banking industry. There are a lot of opportunities for us to find new job, and they pay quite well as well because they want to purchase your experience. The second part is the cultural difference. The cultural difference is because a lot of shareholders, for each company, they usually form a joint venture for running the virtual bank. In my case, I was fortunate. And is the solo investor. So I think from joint venture perspective, you know, when there's multi-shareholders, they tend to have different ways to work on things. One cultural difference everyone experiences is the tech mindset and the compliance banking mindset, traditional banking mindset are very different. From a tech mindset perspective, they think everything is doable and we can just building up gradually, piece by piece, and we can launch the product first before having the holistic product being fully, comprehensively, functionally done. But from a traditional banking perspective, we would not launch any product until we see the end result is bulletproof and full of functions for the customers to be used. So these two are very different mindset. There are definitely a lot of struggle and compromising from both sides. So I think this part will be something every virtual bank or every tech, fintech, whatever company combination will see this type of problems. And also the real corporate culture is different as well. We are always joking for ByteDance. This is a very famous tech company in the world as well. The average age of employees there are like 26 or 27. If you reach 29, you probably can retire at that kind of company. While in banking, if you want anyone experienced at least, I think you have to find someone 40 and above. So that's why there's a huge conflict in terms of the mindset. And certainly you have a youngster being your senior management, and you have to be very open-minded and accepting of new ideas and new people, new ways of working on things. The third part is really as what has been mentioned as well for the regulators. There are a lot of new ideas from the virtual bank actually, but how to regulate the new products and new ways of doing things. For example, crypto is something every regulator is exploring how to manage that. And some of the virtual bank may be focusing on the cryptocurrency integration and some of the products having a crypto elements as well. The remote account opening is probably easier for the consumer side, but how to ensure the corporate side also being done properly, having the right KYC, CDD, KYB, and all this done. The same type of risk appetite of the regulator. And I think from a regulator side, they also need new talent to manage a new segment and be open-minded. In one hand, for the regulators, it's very hard for them to just accept all the new ideas. But if you're not accepting any new ideas, and if you look at the digital banking versus the traditional banking audience, it's quite similar. Basically, in terms of the scope of services and products, there's not much difference in the two guidelines, at least for Hong Kong case. So if you scrutinize the innovation too much for the virtual banks, you're making the virtual bank to be a traditional online banking. But on the other hand, you want innovation in your country, in your banking industry to secure the financial innovation or the international financial center type of status. So it's a huge conflicts there from the regulators to learn and try and error as well. but everything links to a systematic risk. So it's not that easy for a regulator to regulate the new banking industry, I have to say. And that's why for the virtual bank, it's also, they have to spend a lot of time and efforts to persuade and also do self-assessment before they come up with any new ideas. The fourth part is the new alliance formed. And as everyone rightly pointed, instead of just fighting against the new trend, the traditional banks try to have more collaboration with the virtual bank as well, while virtual banks are also seeking new industry partners. Most of the banks have two mainstream of approaches on that. One is to partner with the giant, well-established e-commerce or retail companies. The other side of the coin is to partner with different startups, because the startup have a lot of different ideas and they want to grow together with the startup to be giants together in the future. So these are quite interesting. For my old experience in a traditional bank, it's very rare for a CFO to meet any startup or business partner. But while being here in a startup company as a virtual bank, we look at all kinds of different business ideas and try to make something we can come up with a wow elements for our customers and have some right chemistry to come up with the newest product or most seamless solution experience for the customer as well. So this part is very interesting, and every bank is trying to have a breakthrough on that. The last part of the sweat and blood or tears is really the path to profitability and sustainability. In Hong Kong, there are a lot of news covering saying that the regulator allows, the fact that regulators allows for 8 banks to be open together at the same time is actually creating a huge, intense competition. Everyone predicts there are only half or even less banks will left over a 5 years horizon. So hopefully we can be one of them. It really depends. So that's why the challenges and pressure is huge.
Interesting. I mean, just to sum up, I think the 5 points. Number one is talent. Second one is really conflict management amongst the consortium partners, the employee, different generations, regulatory compliance, alliances, as well as your path to profitability, right?
Right.
And I think we have been receiving quite a lot of questions, right? I'm mindful that we are running out of time. Maybe if you guys are agreeable, we could extend the time to 7:45 because there are quite a lot of questions coming in, right? I think there are a few that I think more straightforward question potentially I would answer that. Number one is on account opening. I think there's a questions on if you don't even have, if you're in a serve and unserved clients don't even have a traditional bank account to begin with, right? So how do we plan to, how do you plan to capture them, right? If I could share from Malaysia perspective, if we refer to the licensing framework, Bank Negara allowed the usage of agent bank, right? So there can be a process set up that in a rural area to facilitate some form of account opening, right? And Sam has also shared that most of the digital bank, I mean, if it's not all the digital bank would have a remote account opening options that you can leverage on. I think third is really if you have an existing account with certain fintech company like e-wallet, etc. already, right? So I think that kind of thing will facilitate that. The second point I think is about when digital bank, the moment digital bank get a lot more loan, would Bank Negara subject them to a tighter risk management? If you're following the tone from Bank Negara is that they are going to apply the same rigor that they're applying to a traditional bank to the upcoming digital bank, right? Especially at the end of the foundation phase, 5 years later. So to provide, with an aim to provide the same levering to both classes of players, right? I think those are some of the questions. Sam, I think there are a couple of questions for you. If I could ask that, Number one is about I think a lot of them has a lot of questions around cybersecurity, right? So if I use a deepfake apps, can I cheat your banks and open an account remotely? How robust is your controls and cybersecurity measures?
Well, it's hard to explain in details in this call, but in general, we are very strong into cybersecurity. And thanks to our parent company, they operate Ant and Alipay for more than 1 billion people in the world. So I think that part of the experience is really useful. And I think the talent part is also very important. You have to hire those people with the right skill set and set the right security control in terms of all the infrastructure. So that is something we must ensure as the virtual bank to give the trust to our customer. That's the basic requirement for having the virtual bank. Yeah.
Thank you for that. And one more question is a bit more controversial, but I think will be interesting for us to debate and deliberate. You earlier on you mentioned about digital banks in Hong Kong are largely mandated to drive financial inclusion, right? I think that cover your students and young adults, right? And you mentioned that their responses and their reactions to digital bank has been low or lower than what you would expect. So is digital banks in Hong Kong having financial inclusion as a banner, right? Label themselves that I'm here to drive financial inclusion, or are you really living by the mandate?
Yeah, I think that's a very interesting point. Every newspaper covering virtual bank as financial inclusion, but none of the bank actually selling this branding in the slogan. We will not say that we are doing it for the charity and whoever customer come to us, I know you guys are underprivileged and all this. No. We don't label customer as such. We just offer the product that is more fair and equitable to the customer. Definitely the bank will make less profit than the traditional bank, having a thinner margin. And if the customer enjoy the return and also the customer experience, they will come and open an account.
Right, thanks, Sam. One last question for you maybe is on, since virtual bank doesn't really have an RM that what we normally would experience as a consumer, as an individual, right? So, and the engagement from a bank is perceived to be more passive than before because there's no one you can talk to, right? How are you seeing that from moving from having an active relationship manager to a more passive relationship managers relationship with the digital bank? Would you then say that the amount of user will become a key metric to drive your profitability and revenue?
Yeah, definitely. I think all the foundation of profitability model based on the scale. So the infrastructure that we originally put in is definitely a huge capex that invest, and definitely we need the scale. Especially as I mentioned, we run on a thinner profitability, a thinner margin type of business model. But something is very important is that the elimination of human touch is actually one of the trends that the new generation is creating. So a lot of the new generations, they just want to stick with their phone. Whenever they have problem, they may not want to discuss with people. They may ask a question in the group and see whoever will answer them, or they may even find out the answer, a relationship question post it online and see whoever will reply to them. So they don't want to be bothered by people. They definitely hate people doing hard selling as professional selling in the past. And they want more tailor-made yet homogeneous product. So this is a very interesting part that we observe in the virtual bank or in the
homogeneous. All right.
Exactly. The tech theme type of thing, no matter if it's insurance business, we have seen In the past, you can only buy plan A, plan B. If it's for life insurance, you can choose the amount you want to be insured and all this blah, blah, blah. But if you put it on a digital platform, you don't need an advisor to tell you what kind of insurance you want, because nowadays the information are so accessible on the internet. People know precisely what they want, and they want more tailor-made solution. For example, now we see the technology can help insurance company to set a premium or sell you an insurance by specifying, I only want 11-month protection for my cats, which is a pet, for only 3 types of disease. I don't want your 10 types of disease coverage. I want lower premium, but 3 types of coverage. So there are a lot of standardized structure, as you can foresee, in order for people to set 5 to 10 parameters of choosing a homogeneous products. There are some variety they have to put in the back end of the system. It's like you twist the parameter and it comes up with a tailor-made result. So it's actually the trend for eliminating the salesperson, because you don't need them anymore. You can make your own good by tailor-making whatever you want.
Right, interesting. I think from a question perspective, there are a couple of questions around talent, recruitment. Maybe with that, I will invite Nising to share certain view, right? Since you are in the midst of building a bank in Singapore, right? So do you get a sense of what sort of profiles of talents a digital bank would be looking for? And one interesting questions in a way would if I have a degree in a fintech, or if I have a degree in data analytics, would I be perceived positively, right?
Yeah, I don't think it's the degree that matters. It's really whether the person has the curiosity and also that drive to join a company that is essentially a startup, right? And trying to build something up from scratch. Having said that, I think what Sam mentioned earlier, the conflict management is extremely important. So the ability to sort of work with different types of people, being able to talk the regulator's language when you're communicating with the regulator to display that level of gravitas, that you understand what are their concerns about risk and compliance and so forth. But at the same time, being sensitive to the product engineers, right, who are just, they want to launch their product the next day. So you have to manage all these conflicts, and really is challenging. And so I think having that right mix of people skills and having that drive and that initiative, I think are the key drivers for looking for the right person.
Thanks, Nising. I think last question, we'd like to invite Rizwan here. Last but not least, one of the questions, I think today we talk about a lot of remote account opening, right? If remote account opening is the only one, is one of the main advantage of digital bank have over the e-banking channel of a traditional bank, do we really need a digital bank, right? I suppose the question comes from reacting to the recent changes by Bank Negara. I think they have introduced an eKYC guideline allowing a remote account opening, and we have also seen some local bank, I think Alliance Bank, Hong Leong Bank, etc., has started accepting individuals and SME to open their account remotely, right? If account opening remotely, one of the main advantage of digital bank, do we really need a digital bank? Can we look at conventional bank? I think that's the crux of the questions.
Yeah, I think I would want to turn around that question to the person who's asking. Under the total lockdown situation like now, if your life depends on opening up a bank account, or your business depends on opening up a bank account, wouldn't you be glad that you can open your account remotely under the current situation? Because this pandemic is not going to go away. But that's really a cynical way of answering that question. The really true value of digital bank, which I think Sam and Ising has looked at and now trying to build, is it's not just about a touch and go kind of service with the client. Remember that we are talking about the P40 unserved and underserved. We are talking about here where we have the opportunity to elevate the life of these people. And the digital bank is one of the best platforms for us to be able to increase awareness and literacy about financial matters to P40, unserved and underserved. The ability to provide them a graduation from a poorer lifestyle to a better lifestyle. And as they get along and have a bigger family, the bank, the digital bank, is able to cater for their need because there's a symbiotic relationship that's based on the data that they keep providing to this digital bank. And as long as this digital bank are ethical, following the rules, and really focus on the value add to the target customer that they are looking for and trying to serve all the pain points, I think this is really a dynamic or a kind of points or a vision that many of the incumbents are not even interested in. And imagine if you have this kind of relationship with a group of investors, that will be superb. And you probably have not heard this being mentioned by any of the incumbents, not because they are not aware, but they are not able to do it under the current circumstances. So I think one of the key features is that one of the key vision is to start with eKYC and what Sam just now said about remote account opening. But the true expansion or enhancement of the banking relationship will need to start with the ability to do it with less intrusion and the mindset of pushing products and try to monetize the relationship. But this is elevation of lifestyle. That is something that I truly believe, if really put properly in the customer value proposition, and if they really understand how to formulate the customer lifetime value formula, I think it will be a tremendous business model where you can really build a lasting relationship, and those customers are really supporting the growth of the digital bank. That's my thought.
Thank you so much, Rizwan. I think I'll add a simple statement on top of what you just said, right? Also looking at customer experience, looking at deposit to today's in a bank. Would a fixed deposit from bank A, how different from that from bank B, how different from that from bank C, right? I think digital bank also bring in the whole perspective of enriching customer experience, right? I think with that, I think that come to the end of the FinTech Forum series number 1, digital banking, the next level of banking experience. With that, we want to record the appreciations on behalf of the society to the 3 dashing gentlemen that we have, right? Sam, I think thanks so much for sharing your insight. We probably will invite you back when your bank turn profitability. Hopefully, in finger crossed in the years to come, right? Nice. And thanks for joining us in the call today, right? I think you are set. Your country is set to launch a bank by February next year, so we will watch you very closely to see what are things that we can learn and apply here in Malaysia. Rizwan, I think we are currently in a critical time for the whole digital banking race. I think let's see who are the final 5 we knew that we could get in Malaysia, right? So we can certainly do another round in the months to come. Right, so I think the last thing is that I think the final call is about the upcoming webinar. I think as we rightly say, the part 1 is on the banking, right? Part 2 would like to focus a lot in terms of the investment management, asset management, right? So really focusing on this thing called active versus passive investment. Are they competing or complementing each other? The third one which is also the last series of the whole FinTech Forums, is around cryptocurrency, right? So I think those are the important topics I would like to bring up to discuss with everyone here. If we can move to the next slide. Yep, and last but not least, I think we have CFA Society Malaysia is also working with CFA Society in the region in coming out a very interesting topic that's called that has a lot of focus when it comes to social impact sukuk, right? For today, I think we discussed a lot of thematic area. I think we even talk about ethical banking to be more ethical, and in this era, we talk about a lot of ESG, we talk about social, right? I think this is the part that we would like to bring that to the members and candidate of the society. Let's look into social impact sukuk, right? A lot of country has started with that, especially they see that as an instrument to combat the ongoing pandemic that we are seeing today, right? So do join us for that, right? The next one is, sorry, I said last but not least, I promise the last one is around the SRI integration. So look at the MAU event. I even lose track, right? The MAU event that we have planned out for the members and candidates. I think the last one is around the SRI integration. So that focus on the sustainable and responsible investment. So with that, I think we are speaking to the asset manager globally as well as locally, and really ask them and interview them, right? To what degree SRI has been integrated as part of investment decision making today, right? And what are the good practices if there's a fund house, if there's asset managers that you're working with and you are very eager to do that, what are some of the quick wins that you can incorporate as part of your whole investment management process, right? And these are the 3 QR codes for your easy registration purposes. All right, I think with that, we'd like to call it a day. Caroline, do you have anything to add?
No, that's all. Thanks everyone for staying up all the way. Meant to be 1.5 hours, but I think it's close to 2 hours now. So thank you everyone, and
thank you.
Have a good day. Thanks, Panda. Yep. Thanks, Justin.
Thanks everyone for your participation, your overwhelming questions. Look forward to seeing you in the upcoming event.
Thank you. Bye.
Thank you. Bye bye.